let's go ahead and jump in. So Bitcoin has had a decent correction here over the last few days. And if you guys remember that chart I showed you from previously, days since a certain percentage decline, we've now had that 10% decline. We've also had a 15% decline. Coming up on a potential 20% decline soon, although the 20% drop hasn't happened just yet, at least not measured from daily closes. But what I want to talk about in this video is the extension from the 20-week SMA, right? Like that, because that 20-week moving average is sort of like home base, where you go and you check back in with it every so often, and sometimes it holds us support, and sometimes it doesn't. If it doesn't, things can of course get pretty ugly. If it does, then the bulls will point to that. But what I want to do in this video is just simply look at the extension from the 20-week moving average, called the short-term bubble risk. And when you look at this chart, it is still a very familiar pattern that we saw earlier on, right? And basically that pattern consists of getting an initial move up. And if we were to, let me change this color so we can actually see this line a little bit easier. But you get the initial move up right here. And then you get an even stronger move where the extension from the 20-week moving average approaches 40%, right? A 40% extension from the 20-week moving average. Same thing right here. 40% extension from the 20-week moving average. And you can see that in both cases, we extended from that 20-week moving average by the same amount, more or less. Now, what's interesting, and we pointed this out ahead of time, back when we were extended by about 40%, we said that while it is the case that we are just as extended as we were back in March 2023, and while it is true that we will likely bleed back down, potentially at the very least, to the bull market support band, a pattern that has always played out in prior halving years or late pre-halving years, you could still go higher on price action, just like we did over here in April. You can see that even though the extension from the 20-week topped out back in March of 2023, price went slightly higher. But the extension from the 20-week SMA was not quite as much. And so we suggested that perhaps that will play out again. And in fact, that it has. And one of the things that, we were sort of thinking about was a mid-January correction, kicking off a mid-January correction, which is pretty typical. And you can kind of see the same pattern even played out back over here, right? Where you get an extension from the 20-week, right? From the red line here, you get that the initial extension of 40%. I don't know what it is about 40% above the 20-week SMA, but Bitcoin tends to like going there. But what's fascinating is while it'll go up 40%, and that marks, right? That'll mark the full extension from the 20-week moving average. In all three of these cases, price went higher a few weeks later, right? It gets that strong move up and then a slow grind up and then drop, right? You get that initial move up and then a slow grind up and then you drop. Same thing, initial move up and then a slow grind up and then you drop. Right? It's the same pattern that Bitcoin just continues to play out time and time again. And, I know there was a lot of discussion going into the spot ETF as, to sort of discuss whether it would be a sell the news event. And we were looking at the extension from the 20-week SMA and saying, look, guys, we are pretty extended here. We will likely go back and cool off some, and just simply looking at the fact that, it's not that unusual for us to go back and cool off in Q1 of the halving year, right? And it's something that, sorry, I meant to draw it right there. It's something that has happened time and time again. And maybe that pattern will simply continue. But there's one move right there where it did it, again right here, and then again right here. Now, in 2 of these cases, we held out support, but in Exhibit C, we did not. Now, another way to view this is to take the natural log of the price over the 20-week moving average. Now, if you look at it like this, what you notice, you draw a line across the page, and sure enough, the last 3 highs, the last 3 tops that at least marked a local top for a while occurred around the time that the extension from the 20-week, reached this level. So I still contend it's an important level to look at. Now, on a longer term time frame, one of the things I like about this chart is that the extension from the 20-week SMA, when you're sort of in peak bull mania mode, tends to have this diminishing volatility aspect to it, where in the first cycle, the extension from the 20-week SMA was a lot more significant, but as we go from one cycle to another, the extension isn't as great. Now, it sort of raises the question, well, will we hit it again this cycle? It's possible, but you can see that in 2019, sort of a mid-cycle top type value, we did not hit it, right? I mean, we got somewhat close, but we didn't even hit it. And in fact, that extension is well above where we even currently are, right? So, it's hard to say, of course, but I mean, you can see that the peak extensions, when they are hit, tend to correspond to much more significant tops, like sort of like all-time high tops for a long time. So that's something ultimately to be aware of. And again, I think it sort of raises the question, well, is this top here sort of like or is this one here a mid-cycle top, if you will? Now, I'll let you guys in on a little secret. I mean, I think the idea of calling things like a mid-cycle top and all that stuff is to some degree not that useful, right? I mean, the market is going to do whatever the market's going to do, and to suggest a sort of like a mid-cycle top or something implies a lot about the future, when the future is, of course, completely unknown. So to call it something like that, I think is a little bit presumptuous, but I think by calling it that, it will allow people to, to sort of relate to what I'm talking about a little bit easier. And so I know there's sort of speculation. Well, is this significant like that, right? Where you put in some type of local top, and then it kind of stays that way for a while longer, right? Maybe longer than people think it will. Now, we don't know for sure. One thing to sort of point out is that when we got this top here, it occurred about 1 month before the first rate cut. And as of right now, the first rate cut is potentially not until May. It could still come in March, by the way, but potentially not until May. And so there's still a little bit of room there, especially with the Bitcoin halving coming up. So that's sort of a counterpoint to that idea. But I think another way to look at this is to look at it through the lens of, we could look at it through the lens of other markets and think about it like that. If you don't, one potential way to look at it through the lens of another market is pull up the NASDAQ. Right? So if you were to pull up the NASDAQ and overlay it onto the Bitcoin chart, one of the things you might notice is kind of interesting. It's kind of interesting that the market works like this, or at least it worked like this during the last cycle. But so the white line here is the NASDAQ, and Bitcoin is up above. But what you'll notice is that when the NASDAQ durably took out, right, the prior highs, sort of flirted with it here, and then on the second move above to new highs, that actually marked the local top for Bitcoin back in 2019. And so it is curious that once again you kind of have like sort of like a similar pattern playing out where you get your first attempt by the NASDAQ to get above it, it fails, and then the second attempt basically corresponding to a significant high for Bitcoin. And so I do have to wonder, I mean, look, these markets are all about chasing narratives, right? And you know, on one hand, you have tech stocks, you know, they've like Nvidia and some other ones, they're making very significant moves in a very short period of time. So people are just sort of chasing the next shiny thing, essentially. So that could explain why, you know, when the Nasdaq broke out last cycle, people just started chasing that, which kind of left Bitcoin to sort of slowly fade. And note that Bitcoin did not pick up again until we went back to QE. So that's sort of one view of it. You could look at a number of other things. You know, you could look at like the fear and greed index and say, well, if you look at like the raw values here, I mean, we only went up to a fear and greed index of 76, which back in 2019 we certainly went higher. But a counterpoint to that is that while we went higher in 2019, we actually spent a lot more time at these levels here. If you were to take, say, like a 30-day EMA of this, you can see that they basically went to the same level. If you were to look at say, the social risk basically went up to like 0.3 risk, which is basically where it went up to over here. So, I mean, again, like there's sort of evidence that you could look to support both views. But, you know, I do think it's worthwhile to talk about, you know, these risks. You know, in 2019, I don't really think there were many people prepared for that move to begin with. And then when it topped out, I don't really think a lot of people were prepared for that either. It just sort of happened, and then before you knew it, we went down for 9 months straight. So I do think, you know, I do think there's at least reasons to try to learn something from the past, acknowledging that the past does not always play out in the same exact way. We've also, you know, we are in that window, of course, where Bitcoin gets these drops anyways. Oftentimes, when you break out from a level as significant as that, you know, it's very common to sort of go back and test that level at some point. So I think it's kind of too soon to know, you know, which path it's ultimately going to take. I mean, I could come up with 1,000 different charts to tell you 1,000 different things, right? But in terms of things like having year to date ROI 2024, I mean, averaging out all prior election years, it often sort of fades early on, right? And so I think at this point, you know, it really is hard to say. I mean, it's at this point, it's still following, you know, what happened in 2016, right? So there's definitely two different schools of thought right now, with how Bitcoin is playing out. There's a lot of people that view it through the lens of 2016, and are looking at market structure like that, right? Building up something, breaking out, and then sort of back testing it, and then just continuing to do that. I know a lot of people are looking at it like that, which again, I mean, I think that has some merit, especially considering that in January, February of the halving year, we go check in with the bull market support band. Sometimes it holds that support, sometimes it doesn't. And so, I mean, I think the reaction will be important. You know, I do. If it does not hold, then you still have, you know, this level here, and then the 100-week moving average. The 100-week SMA is important because, you know, after this local high here from 2019, which occurred just before rate cuts, we went back to the 100-week moving average, right? And we actually held it as support in the short term. Of course, we collapsed later on with a hard landing with the pandemic. And then the cycle before that, we also went to the 100-week SMA. This cycle, the 100-week SMA corresponded to the 20-week SMA when we visited it. Here it did not, right? So here we actually fell below it, and we went to the 100-week SMA. Today, the 100-week SMA is also below the bull market support band. It's actually all the way down to around 28K. Believe it or not, I mean, you know, Bitcoin could drop to the high 20s, and it would still be within the realm of historical norms at this phase of the cycle, right? It would still, I mean, it would basically be this same sort of move, right? Like, I mean, like you can imagine if you were to take some type of a bar pattern from that wick and then just sort of overlay that, right? I mean, overlaying that wick, going back to the 100-week SMA is still within the realm of what would be considered normal, okay? And again, I don't really think a lot of people here are debating that so much as, you know, is there a soft landing or is there a hard landing? I think that's what people are more concerned about. I imagine there's a lot of people out there that would, you know, have no problem if Bitcoin pulled back to 35K or if it pulled back to 30K or even the high 20s. I think a lot of people would be absolutely fine with that. What I think more people are curious about is how does the sort of the business cycle eventually play out, right? How does the business cycle play out? Does the Fed achieve a soft landing or do they not? One thing to remember is that no matter what happens, soft landings are typically that's what gets priced in first, right? You know, the path to a hard landing is going through thinking you get a soft landing. There are cases in history where you do get a soft landing. 1967 is an example. You could even argue that there were some periods in the 90s where you might make the case that we achieved a soft landing. So again, I mean, it really depends on how long the Federal Reserve stays the course. And I think there's a lot of people that claim to know the answer to a lot of these questions, but the reality is that, I mean, a lot of it is really just dependent on how aggressive the Fed is. And if they stay aggressive too long, they run the risk of inducing a recession. I mean, you can see like bankruptcies and delinquencies are rising. Layoffs are picking up again in January here. So it just really depends on that. And you know, there has been, while I am still in the camp that inflation will subside, there has been some news recently that have introduced renewed inflationary pressures. Like, you know, some of the shipping stuff throughout the world has really the rates have gone up a lot. So I think the concern is that the Fed is sort of strapped right now, right? I'm sure they would love to cut, given that there are companies, you know, that are losing a lot of business. A lot of small businesses are getting hurt a lot more than I think a lot of the larger businesses are. But it's really hard to do that, right? It's really hard for them to go to pivot, at least at the next meeting in January, when you still have inflation that hasn't really gone anywhere for a little while, right? Like if you were to look at inflation, headline inflation, it's kind of just stayed flat at 3% for a while. And, you know, the issue with it, you know, just sort of hanging out at 3%, is that if you were to go back to the 1970s, you can see that after this first peak, it came down and bottomed out around 3%, right? Around 3%. And when it bottomed out around 3%, that was in August of 1972. And what you'll notice is that, you know, the Fed, they did, you know, basically monetary policy was not held at a restrictive level long enough to really squash inflation. And look what happened. We got a second wave. And look what happened when we got that second wave. The S&P, it went up a little bit more and then it crashed, right? So, I mean, I think it's relevant to think about that. You know, I mean, what does the Fed do? I mean, you know, we're at 3%, and that's where we were back over here as well. If you're looking at this and you're saying, well, Ben, this peak doesn't really compare. This peak over here is a lot higher. They changed the way inflation was calculated. Okay, I mean, if you were to calculate it the same way, this peak right here would actually be probably all the way up at like 10, 15%, like 12, 15% or something. They changed the way it was calculated. So keep that in mind. But the point is, if you're the Fed, what do? If you pivot too soon, you run the risk of inflation going up. And then forget 5.5% for the Fed funds rate. Maybe you have to go up even higher. But the counterpoint is if you wait too long to pivot, then layoffs start to pick up, right? So they're really between a rock and a hard place, honestly. I mean, I certainly don't envy their job, and I don't really know what the right answer is. I do think pivoting in January does certainly have a lot of risks, and I don't think they're going to. But every month that goes by without doing it, the odds of an economic slowdown go up, right? The longer they stay at 5.5%. So, that's where we are right now with Bitcoin. In the short term, if this wick here, I mean, if you look at it like on a regular scale, right, it does look eerily familiar. Right, it looks eerily familiar to these long wicks right here. Do note, though, that when we had these long wicks, we actually got multiple wicks up. So you can see there was actually a wick up and then 1 week down and then another week where it went back up. And we had another wick right back up to the upside. And it was in that second wick that Ether Bitcoin broke down. You like how I snuck it in? But it was in that second wick that Ether broke down against Bitcoin. And I mean, right now it had this move that I know everyone was watching, but I mean, it's kind of just fading again, right? It's been doing that a lot where it gets these big pumps and then it just sort of slowly fades back down. So certainly some interesting times. I think it'll be really interesting to see what the reaction of Bitcoin is if it does fall into these milestones that we've outlined, right? The bull market support band, the prior breakout zone, the 100-week SMA, and so on and so forth. So do keep an eye on those over the coming weeks, and we'll just take it one step at a time. Hope you guys enjoy the videos. Make sure you guys give the video a thumbs up if you have not already. That does help me out. Subscribe if you're not subscribed.